Good morning, LifeWealth Group family. This is the week of April 18th. Next week is your niece's birthday, so that's how I remember. So check with me to see I did do something fun for her birthday on the 25th. So the big focus again of what we're looking in the news is the war in Ukraine. It is what's happening with inflation. It's happening what's happening in the markets, and I'm going to share with you a little bit of two new ideas, concepts that we've deployed very successfully in the last 4 to 5 months that has worked out well to be able to bring stability in portfolios. So just a quick update on Ukraine. The siege on Mariupol continues, but Russia's focus seems to have turned to the Donbas region, which is on the eastern side of the country. Many different regions in that area has already been possessed by Russia, and Russia is focusing specifically to gain more momentum. We see also that it's more difficult for Ukraine to be able to defend themselves through their air force in the lower regions, southeastern regions of the Ukraine. They are also infiltrating much more through Crimea that they have taken in 2015. So unlike Kiev, Ukraine is unlikely to be able to mount, as I said, the same level of defense in these areas. And a successful military campaign in the region would offer Russia a victory after the so far failed assaults on Kiev. And President Zelensky of Ukraine maintains that Ukraine will not agree to any treaty that concedes any Ukrainian land to Russia, and he worries a successful Russian campaign in the Donbas region would re-energize Russia's military to attempt the takeover of Kiev once again. In the UN reports, many Ukrainian refugees are returning to the Ukraine. The UN reports that a number of total up to 870,000 people, with 30,000 additional refugees returning each day. They're coming more towards the western side of the country, where there's much less military action going on. And I just feel for the folks who have fled for the majority to Poland, seeking to come back home and to reestablish lives. We don't know if this is a beginning sign of Ukrainian people believing that there's a de-escalation in the future of this war, or if it's just simply a new normal or hope that they have that they will be able to come back to their own country. In the big picture, what does the conflict mean for the long-term power balance between Russia and China? This is a very, very talked topic. The strong Western reaction to Russia's aggression likely gives China pause when they consider their own ambitions to annex Taiwan. And China just continues to maintain very, very neutral stance and has not publicly acknowledged providing any material support for Russian forces in the Ukraine. The damage of the Russian economy and world standings will affect their long-term standing in the region and allows China to become even more dominant in the region. And here's what's happening here close to home. We've been cruising at a known inflation rate of 7%, but last week the official inflation rate came out at 8.5%. Liam, my 16-year-old, sent me a screenshot of the real inflation as it pertains to certain goods, and goods specifically, and how much different it is now at this 8.5%. So obviously you've seen that gas at the pump is at 50%. Airline tickets is at 22%. Restaurants is at 16%. And a good friend of mine told me that pesticides is about 50% so much as gas is. Also, what is looming and that is interesting is the average 30-year mortgage rate. It is now over 5% for the first time since 2011. I had to personally lock in a loan, a construction loan, last week, and I was so relieved that I was able to lock it in below 5, but that in itself is a story and a miracle of its own. But these interest rates is concerning. It's concerning to see this. The real estate prices in Central Florida is not slowing down. The appreciation is not slowing down, and it has a lot to do with people still loving our governor and loving our freedoms and loving sunshine and a drive of new people coming into Central Florida. Gasoline prices remain in the news, but natural gas prices has been spiking due to unusually cold weather across the country. And so we just continue to see this inflation putting pressure. Big question we got is how deep and how long will it last? That's the biggest question. How long is this war going to be? How long before inflation normalizes? It's the million-dollar question. all these uncertainties, that's obviously what creates a lot of volatility in the stock market. And we're still trying to see how that all will play out. I know that our sanctions that the U.S. have put upon Russia is playing out in itself, and it's adding to the volatility uncertainty. So hard to say how long it will last. I don't think it's a month or two or even 3 months. This is probably more like 6 months to a year before we'll see any outcome on the war in Ukraine and Russia. So from the captain's seat, I'm just reporting to you that we will still continue to have a lot of volatility. So what can you do, and what are we doing for our clients during this volatile times? You've heard me say this many times, that if you don't need your assets at this point in time, don't lock in losses. All right, that's still fundamentally important. We have used a strategy for our clients who are in the income phase of their lives to plan out their investments, not just a 60-40 across the board, but real specific investments that are much lower risks that we are lining up for cash that we will be distributing to our clients at that point in time. If you are 5 years out from retiring, you should really pay attention to what I'm going to be saying next. The power of planning is really, really important to understand. In your financial planning process, you understand your cash flow need during years to come, and that should dictate for you the way that you're investing. We're releasing or using tools that provides absolute downside protection. We call that equity indexing. There's different versions of that. There's also market-linked products in the form of market-linked notes that provides downside protection for our clients. We call these stabilizers that really help with volatility and during this period of time. And it's settled down a lot of our clients and our families that we're working with. We also have tactically managed portfolios that will very, very quickly automatically react to markets and move to cash in safer environments when we see a very sharp downturn in markets, reduces volatility. But then we have two very alternative strategies that are unique. We have a portfolio called the Unique Possibility Portfolio. It's a portfolio that my group has launched in the beginning of November that is investing in about 25 stocks that are very closely watched, that prospers in an environment of high inflation, low interest rates, and high infrastructure investments. The investment performance of this portfolio, I just got my numbers out for the end of the first quarter, has had a net performance of 8.16% positive. Folks, when you put a portfolio in the mix that is growing at 8.16 when every other index, national index, NASDAQ, Dow, and the S&P is down by anything from 5 to 13%, it really reduces volatility. A really good strategy to be able to look at. The second strategy we've developed is in an environment where markets are going sideways, or we're not seeing very much returns, or we're seeing slightly negative returns. We developed a high income portfolio that produces a 6% predictable return in the form of paying dividends and interest to our clients. This is a really good strategy to look at to get some forward momentum in a sideways market and increase the probability of lower risk, as well as increasing the, I would say, the certainty that of returns. And it comes in the form of what we call yield or cash flow. Put 100,000 in, there's a predictable 6% return in the form of dividends and interest. Really, really good strategy as well. So we continue to innovate, bring forth ideas and strategies to be able to help and reduce volatility, create confidence for our clients. And so we will continue to monitor what's going on a day-by-day basis. We'll continue to monitor the money managers that are working on our behalf for our clients and their performance on an ongoing basis. So here's what I would have you do. If what I'm saying to you resonates and you're looking for confidence and you're looking for answers, I would suggest that you call our office at 407-299-4129 and schedule a 50-minute conversation with us. In this 50 minutes, we will be able to ascertain how we can help, if we can help, and how we should help, and give you the confidence to be able to set up a second conversation to come and visit with us in person. I would also encourage you to schedule a meeting with us online at www.lifewealthgroup.com. You can schedule a 50-minute conversation with us there. And also check your email for upcoming webinar links that we will be doing and sharing with you during this period of time. We always so appreciate the opportunity to serve you and help you. If you'd be kind to pass this video on to some of your friends and family members who have been asking questions about what's happening, our number one source of growing the practice year over year is from our existing clients introducing their family members or friends to us through introductions. So we thank you again for paying attention, and I look forward to being with you next week when it's your niece's birthday. Have a great rest of the week.